Hello, my friends. I'm glad you're here. Let's talk about Carvana. So friends, I'm going to let you in on a little secret here. This is a stock that I've been watching for a while now, and I've been secretly putting in money. Now, this stock has been all over the place. This is a company, when it first came out, it was one of those things where people were saying, like, this is never going to work. This is the stupidest thing in the world. Who's going to buy a car sight unseen and have it delivered to their house? Well, you know what? I find, and I talk to more people just running in the day-to-day life, they bought their car from Carvana. And today the company is celebrating 10 years in business. So they're doing something right. They're like the new thing on the spot right now that a lot of people aren't talking about. And like they're kind of going under the radar. And they're a Fortune 500 company. So maybe it's time we start looking at this for the next 10 years that they're going to be in business, because it doesn't look like they're slowing down whatsoever. And obviously people are not going to stop buying vehicles. So it's good business all around for everyone. So to get a good clean slate of what's going on here, the last 6 months, Carvana has been through the ringer. You know, just in September of last year, the stock was at a $33 range. Then it plummeted down to $4. A little below $4 at one point. Since then, we have been regaining ground. Now, I personally believe Carvana is going to be one of those companies that when we see our bull market come back again, it is going to be one of those stocks that really shoot up and take the effect of the whole bull market. Now, will that be this year? Most likely no. I don't believe there's really going to be a bull market this year. I believe that's coming down the road, maybe next year, the year after that. Who knows? There's still way too much going on in the world to damage the market right now, and investors trust it. But the big question is right now, is Carvana a buy at $10, or is it going to start to, take a little more damage going into the rest of the year? It's still very early in the year right now, so what could possibly happen? Now, with rates kind of staying the same, some going up, some going down, inflation is coming down at a snail's pace. And this time last year, Carvana was sitting at right under $160 per share at one point. I mean, that's freaking nuts. That is nuts. And the year before that, it was at almost $400 a share. So crazy numbers. And I'll say this too, a lot of you know that I really like to look at chat rooms or what people are talking about with stocks. I think that is such a good indication of how people feel about a company, a stock, and really get how the next X amount of time can go with volume, buy-ins, buyouts, and what's going from hand to hand here. And Carvana is a very hot topic right now with it, being in business for 10 years now. It's affordable for almost every investor, whether you can buy $10 here or there. And like I was saying before, where do we see it going? This year has been really weird so far in the market. January, February here, they've been okay. They have not been terrible for us. I mean, they've been better than, November and December of last year. That's for sure. And most months in the market of last year, let's be honest. Now, with Carvana celebrating this 10-year anniversary, obviously, there's a lot of hype right now. It's being talked about quite a bit. It's being pushed, and, that's great, and that's what we want to see. And, this whole month, it's done really well. And even this month, making it almost to a $15 price point. But as we watch Carvana here really build onto something here, we could see the new range with the price point be around this $8 to $13 mark right here. And I think if you can get this at a $7 to $8 range on a bad day, you might be in some luck here 6 months from now. Now, one thing that we've seen here in the past with Carvana struggling is because the used car market has become a bit of a hard market for companies to get their hands on their merchandise, and used cars have really shot up here as well. So Carvana took damage in the last few years from that situation. There's still 43 big hedge funds that are holding on to Carvana stock right now. And we're seeing Carvana open more of these car vending machines across the country. So there's still a company that is expanding and really building on what they're doing. They've only been a business for 10 years. That's nothing. Now, what's being relayed to the public right now is that Carvana finished their third quarter with $316 million in cash and is also $1.96 billion in short-term credit facilities it can tap. Carvana has more than $2 billion unpledged real estate and other assets that it can use to borrow if it needs to do so. But they do have $213 million in debt due to this year. Now, here's the thing, what really intrigues me about Carvana is that I like stocks that are obviously the underdog, and obviously this company has a slew of people saying it's crap and a slew of people saying it could possibly do something here. Now, like I said, my full bet on Carvana here is that when we have a market that is taking off again, we have a economy that is taking off again, and you're seeing things to be more affordable for every day-to-day people once again, where they can buy cars, they have money in their pocket, people have savings accounts again, credit debt possibly down. We're going to see the car market really take off again, which is what shot Carvana up in the first place just a couple years ago. But now that people are poor and they don't have what they had before this whole pandemic mess, now that we're in the long effect of it, people are not buying cars like they were. So Carvana's money has kind of dwindled down a little bit here. So, friends, us as investors, we're always, and we should be looking to the future. You can't look at a company right now so much and go like, well, they're still in business, they're selling cars, but I don't know, it's just too risky. Of course it's risky, but the thing is, we have to look to the future. And, a lot of people think that we're going to see a bull market with people and their finances next year, with the stock market, and possibly inflation coming down even at least 2 to 3 more percent is going to really affect people's pockets, and people are going to have to buy cars. They're going to have to spend money. Bullet points on this, friends, is that I'm honestly hoping that Carvana kind of, either goes back down to the $7 to $8 mark to where I can scoop up more shares, or we see Carvana turn around here again. But I, personally, I don't see Carvana turning around like dramatically this year. I think around this $8 to $15 range here, that's going to be your ballpark, unless something dramatic changes here. But, Carvana needs people to buy cars, and people are not buying cars like they were just 2 years ago. It's just not happening. So friends, let me know what you think. I'm bullish on Carvana, but I think we're really going to have patience with this one. So friends, until next time, I'll talk to you soon. Bye everyone.